Tasha, what are we seeing here? Profit taking, or are there more declines to come?
Well, it could be a number of factors today, but investors might be worried about coronavirus. But, I think that's a really short-term focus. At Ark Invest, we're long-term investors. And we actually just put out our latest research on Tesla. We think over the next 5 years, our expected value for the stock is 7,000. And that's because it's a leader in electric autonomous vehicles, and that's the future of the auto market. And what we've seen over the past year is that traditional autos have really struggled to produce EVs that are on par with Tesla's cars. And its data library in terms of autonomous driving is really just running away from the competition.
So, yeah, 7,000, that's a very impressive prediction and a long way from where we are now. So does Tesla really have that much of a head start on battery technology? Because it ships far fewer cars at the moment than established automakers.
Yes, well, in electric vehicles, Tesla is the leader, and that's because they're writing down the battery cost decline curve. So at Ark Invest, we've actually done a lot of work using Wright's law to predict the future declines of batteries. Basically, for every cumulative doubling in production, you get a corresponding reduction in cost. So if you look at Wright's law, we actually think that Tesla's gross margins could go from, say, around 20% today, if you take out credits, to up to 40% in the best case scenario. And they also have not lost share in the electric vehicle market. They're sitting right around 18% share. So we think that they're at least 3 years ahead of other automakers on a battery efficiency standpoint. So that's dollar per range that you get out of the car. And then on autonomous driving, they're the only automaker that's collecting data from their vehicles. This gives them a massive advantage in terms of training their machine learning algorithms to get the car to drive.
Besides the advantage, Tasha, how do you get to fair value of $7,000 in the next few years? You have a path from 734 now to 7,000. How do you get that fair value number?
Well, we've actually we've devised a probability matrix, and this is all on our website, this research, where basically we've looked at the past year. We've seen what Tesla's done in Shanghai. It's amazing. They've built the factory in less than a year, and they're right now shipping cars. Tesla's shown that they can scale in a capital-efficient manner. So we look at a few key variables. We look at capital efficiency, gross margins based on our Wright's law work, and autonomous driving. And we set probabilities to each of those that helps us arrive at that $7,000 mark. And our bull case is really driven by autonomous driving. This could be a huge opportunity for Tesla. It's going to totally transform the business model if they pull it off. They're going to get software-like margins in a market that we think could be worth trillions of dollars globally.
Tasha, Steve Eisman of The Big Short told us this morning that the stock is no longer trading on valuations. He had to walk away from his short positions. What do you do with a stock like Tesla when it no longer trades on valuations?
Well, I think Tesla's been misinterpreted for a long time. One, on the autonomous driving front, I mean, we're really only hearing sort of this story be a more common theme in terms of what people are talking about for Tesla. And you can't value it like a traditional automaker because the future of the auto industry is changing. Electric vehicles and autonomous vehicles are going to make this a more consolidated market. A lot of automakers are going to go out of business, and Tesla's really in a great position to take advantage and be the leader of the future. So again, if you look at autonomous driving, that means software-like multiples because we think they'll get software-like margins off of that business.
Tasha, what are some of the risks here for Tesla? Because we've seen with the coronavirus, the risk that can be posed to the supply chain in China. What other risks are you watching?
So I think, in our bear case, we're actually assuming that autonomous driving doesn't happen at all. And in that case, we think the stock could go to 1,500 in the next 5 years. So we do have some puts and takes on that front. For our electric vehicle forecast overall, we think there could be 37 million EVs sold in the next 5 years. One risk to that forecast is actually that the rest of the auto market has lagged so far behind Tesla that they basically might not be able to get those production figures. So the rest of automakers basically might not make that sort of market assumption as large as we think it will be. But for Tesla, I mean, its advantage today, we think it's 3 years ahead on batteries, 3 years ahead on autonomous data, 3 years ahead on autonomous hardware. And if you look at the software updates, I mean, you know, GM, VW, these companies are just getting over their updates into vehicles for the first time. Tesla's had this since the Model S. So, I mean, their lead here is really incredible, and we've actually been surprised that other automakers haven't caught up.
I just want to get your thoughts on a recent tweet from Elon Musk as well. Just 2 words, Giga Texas ? Do you believe Tesla might be building a plant there?
I certainly think that's a possibility. You know, we think that Tesla's in a position now where they should spend as much money as possible just getting more vehicles on the road. And for autonomous driving, that'll be very important to collect data for them. We heard in the past earnings call that Musk will launch a ride-sharing service ahead of autonomous driving. So, you know, I think, again, sort of getting to scale is important for that. And if I were a company like Uber, I'd be scared that Tesla has made this announcement.
What is the ability of Tesla? We saw last year building the Shanghai factory in record time. The technology is the same. You make a few small tweaks to the assembly line. What is the rate at which they can build out those new factories? Does that get shorter and shorter?
So they've said on the past earnings call that they've certainly learned from their experience moving from the U.S. to Shanghai. So I think if you look at Berlin, you know, I think China went up in record time. I think Berlin could take a little bit longer, but we know that they've learned from sort of the lessons that they've had scaling over the years. So I think Elon Musk says that this will be online in 2021. So I think they could likely hit that target. And another thing is, we've actually been hearing management be more conservative than they have in the past. So I think that's really important of the perception of this company. Elon Musk gives very aggressive estimates, but we've heard him be more measured on the earnings calls.